So I've just sold all my dividend stocks that was in my dividend pie. So it was around £3,500, as long with some individual investments I had in the investing tab that I done outside of the pie. So I've sold these. You can see here, so the order of execution, so the dividends. I withdrew all of them to have free funds so I can invest in some other stuff. Now, there's a few reasons why I've done this, which I'll get to into the video. But the first was because my changing goals. So through 2020, my goal was to kind of build up a portfolio. I actually originally wanted to hit about 16k, but I smashed that target, hitting £26,000 at the beginning of January. My portfolio is worth. Part of that was in trading 212, which is worth £8,000. The remainder was in crypto, private companies and startups, and in my Hargreaves Lansdown from mutual funds and ISAs. So the reason why I'm selling my dividend pie on trading 212 is because I built up a kind of stable portfolio. I've got nice profits, and now I want to take some more risks. So dividend companies tend to be a lot safer. They're less volatile. They don't really have price increases, and you can expect 4, 5, 6% a year, which is fine and healthy. But for going into 2021, I want to reach a £60,000 portfolio starting in 2022, end of 2021, which means I have to take a lot more risk. I have to put a lot more work in and pick funds and companies that are going to do a lot more work and get a better return on your money. So I came around this by doing thinking about how I'm going to reach my goal of 60,000 by the end of the year. And I know this bit's a bit boring, just going through the numbers, but I predicted I can invest from next month, February, going through December, I can invest a total or deposit around £12,000, which will put my total portfolio value up to £32,000, plus the £7,000 I'm ahead of my baseline. So at the end of 2020, I'm projected to have around £40,000, and that's assuming I deposit £12,000, and over the year my portfolio grows 7%. So I need to increase not only my deposits but also my return, and dividend safe companies just aren't going to do that. So what I've decided to do is invest in risky companies, and I've created ARK ETFs through Trading 212. I'll show you how to set up an ARK ETF on Trading 212 later on in the video, but to start off I want to show you what ARK is. So ARK is a investment management company that specializes in ETFs in disruptive innovative technology. And they got a really nice quote here, is because the main argument with these kind of investments in stocks and companies is that they're always overpriced. How can you justify paying X amount of money for something that's earning like 1/10 of that at the current price? And it's saying disruptive innovation is often not priced correctly by traditional investment strategies because people may not understand how big the opportunities are going to be. They aren't sizing the opportunity, and they aren't analysing the disruption. So what this is saying is you're looking at today's value and you're not properly accommodating the opportunity of the future returns and future value. So you can kind of see ARK's kind of mission here. They specialise in growth, innovative companies. By nature, that tends to lean towards tech companies. And these are some of their best ETFs. So they've got ARK Innovative, which I believe is the main popular one. They've got Autonomous Technology and Robotics, Next Generation Internet, Genomic Revolution, and FinTech Innovation. So the funds I built on Trading 212 and invest in are FinTech Innovation, Genomic Revolution, and ARK Innovation. So again, I want to go through an overview of how well ARK's performed in the future. So I'll go through each of the funds that I've invested in, but I just want to compare them to the S&P 500 here on this chart here. So you can see this is showing their top ETFs doubled this year. You can see the entire market breakdown compared to the S&P 500. So you've got the Genomic one, the Innovation, and the FinTech one, which I've just recently invested in. So even short term, this is long term. So just looking at the 5-year performance, they've returned 274%, 401%, 423%. This is a new one, but in the last 1 year, it's changed 90%. And then this final one here is 242%. And this is against the S&P 500, which has returned 76% or 197, let's call it 200% in 10 years, whereas this has done well more than that, almost double that in two of the funds in half the time. And this is because they've, like I said, they've been investing in disruptive, innovative companies. So just to give you a highlight of kind of some of this, we'll start off with ARKK, ARK Innovation ETF. So this is I think this is their most famous fund. And if we just go into the fund description, it talks about what it is. If we scroll down, we can see their fund holding. So we've gone to the funds holding in the PDF. And you can see right off the bat, they've got companies like Tesla, Roku, Square, Zillow. So like I said, these are all tech companies. But the reason why I'm investing in these now is because you can say that at a high price, but I think that's because there's a reason for that. People want companies that can adapt and are innovative. And by nature, that means even with the COVID pandemic going on and causing disruption, everyone's scared of the stock market because they don't know where their money's going in companies and how they're going to use it. For more traditional companies, and like I said, like about the boring dividend companies, these companies, where they're so innovative, they can adapt to changing environments, and particularly already of them have set up a digital infrastructure, which allows them to operate in a market where people can't go out and people are looking for like online orders and deliveries and stuff like that. They're well adapted and they're going to continue to adapt to a changing market environment, which justifies their high price because they're going to continue to grow revenues by innovating. So this is one of my favorite ones, the ARKK. If we go back to some of the other ones, this is quite an interesting one, the FinTech Innovation Fund. Again, just to highlight some of the ones, again, it's got the Square, it's got Pinterest, I think some of them have Snapchat, Amazon, Apple, Workday. And the reason we're investing in these is because a lot of these aren't in traditional ETFs, so that's why you get the different performance. And yeah, so this is just something that I'm really quite excited about, and I'm hoping it continues to grow. Obviously, I've put a lot of money into there. And now I just want to go through on Trading 212 and show you how you can actually invest in these yourself. Okay, so to start off with, you can do this in two ways. You can either set up your own pie by creating a pie, searching for each of the companies by going on and finding out what they are, and allocating the percentage of what that company holds in their investments. Or there are some people out there who have already done this for you. So you can go on to Trading 212. Unfortunately, the website actually doesn't offer it. So if you just open up the app and you can go through it that way. Okay, so now that we've opened up the app, what we're going to do is we're going to the pie tabs. You're going to scroll down and click on Open Pie Library. And then already at the top, because they're so popular, you can see they've got an ARK section or subsection. And this guy here, Treba, he's a great guy. He's really helpful. He always replies to people in the comments. If you have any questions, he'll help. And likely also, if you have any comments, do it on my video. I'll try to walk you through it. But Treba, I want to give him a shout out because he's the one who actually set up these funds to save you copying it all down and making your own pie. You can just copy here. So you pick what one you want. So he's got ARK Innovation, ARK Genomics, ARK FinTech, Next Gen Internet, and the Autonomous Technology. So if you want to go for the most famous one, as I said, ARKK Innovation, you click on his fund here, you click Copy Pie, and there you go. You can scroll through. You can see all the allocations. You click Next. You can put auto-vest or manually, do it manually for now. And then you name it whatever you want. I suggest ARKK, Innovative Technology. And then you can just invest in it. So it's really that simple. And just to show you what I mean, if we go back into the ARKK's top holdings, this is ARKK here. So you've got Tesla, and you can see how well he's mirrored it. There will be some holdings that are slightly out, and that's just because of the nature of the fund and how they change over time. But you can see it's got Tesla, Roku, CRISPR, Square. Now, there are some discrepancies, and that's because Trading 212 doesn't list every single stock that's available. They don't have the access and reach as ARK Investor Company does. Namely, this will be in some of the smaller holdings. So they actually hold a few different currencies. So you can see on the ARK, I think this is ARKF, the FinTech Innovation, they hold some the US dollar, Japanese yen, and Hong Kong dollar, euro. So it actually holds some currency in there just to hedge against different currency conversion rates. But this is such a small fraction of the actual fund, and it's not as important, I don't think. Okay, now we'll go back into the website. There's just one thing I want to have this video about how I'm disrupting my whole kind of portfolio and switching things up. So you can see on my investment where I've invested through pies. So I can keep track of them through the pies here, but on my investment tab, that's really messy because I've got all these different companies. Another big company that I've invested in is Neo, and that's for obvious reasons I said about the growth. But there's a particular reason why I really like Neo as a company. One, they're matching Tesla and they're doing it really well. They have a really high focus on customer service. But if I just scroll down here, I want to show you. So their market cap is 93 billion, right? And if we scroll down to Tesla, so Tesla's market cap is 830 billion. So Tesla almost has a 10-fold market cap, and they're producing this very similar goods. But China's market, Tesla is doing very well. But where Neo's local there, the Chinese company, they have a lot of potential to continue and take over their customers. Not to mention, obviously, when they develop more internationally, and they've got a lot of room to grow. So as you see, I'm invested in Tesla, but I just put a huge drop on Neo. Again, if I get up, so I deposited just about £400 today, right at its peak. But as you can see, anywhere you invested would have been a peak. $14 would have been a peak, where it's scary because it dropped about tenfold. You know, well, not tenfold, about fivefold from $3 to $14. And that would have been a scary investment at the time. But if you've got to believe the long-term vision, and I really think this has a long way to go. Some more risks I'm taking in my portfolio as well. If you noticed on my pies, I actually had a pie called pennies. So today I bought a few penny stocks. These are just they are just a punt. Please don't copy anything I do unless you do your due diligence. Look it up, make sure it's right for you. But these are just some gambles I want to take. So I've got my penny stocks. I've got Alpine 4 Technologies, American Battery Metals, Galaxy Next Generation, Corporate Universe. Each of these I bought for different reasons, mainly because I saw a forum on Reddit. I'm kind of joking. I did read through it, but then I looked through it a bit deeper and I thought it was quite interesting. I've watched a few videos on each of them. I think it is American Battery Metals. So for example, today they've got a press conference, and that's what I'm saying, it's a gamble. I am just banking on getting some positive news, and it's shooting up. Corporate Universe, they're going through a merger with I can't remember the company, Carbon Ion or something. So this is basically, again, developing like EV batteries and sustainable like future kind of thing. So that just gives a lot of potential. Alpine 4 Technologies is another one that's focusing on like the future. So these are all just real gambles I'm just taking an invest on, that I'm taking a gamble on. But it's quite interesting to see. Let me know if you've got any penny stock shouts, or if something you're quite interested in. Because obviously all companies were penny stock at one time, so it's quite interesting to kind of take that risk and see how it can go. But yeah, so that kind of sums up how I've completely just switched up my portfolio from a high dividend yielding portfolio and focus to taking more risks. And like I said, this is just on Trading 212 at the moment, because on Hargreaves Lansdown I'm invested across those of mutual funds, and they're relatively balanced, and I've rode them out quite a long time. I got some nice returns on them as well. But yeah, that sums up my why I'm selling my dividend stocks and how I'm taking more risks. So thanks for watching. I'll catch you guys next time.